So guys, welcome back to another video, and the purpose of today's video is to run through the Harmonic Gartley pattern. So if you head over to my website ottrades.com and click on the patterns tab at the top here, we've got a list of all the advanced patterns and all of the harmonic patterns. Today we're going to run through the Harmonic Gartley pattern. So we've got the breakdown of the pattern here just in the image, and we've got the trade setup down here. So run through of how to identify and how to trade these patterns conventionally. So to get started, then we'll obviously start with our initial X to A leg, and this obviously is not constrained by any Fibonacci retracement levels. This is just an initial price swing. This price swing can be bullish or bearish. The initial price swing will determine the direction of the pattern that we're looking for a reversal in. So in this instance, the X to A leg is bullish, so when the D point completes, we'll be looking for a bullish reversal to happen. So that is the X to A point there. So our first point to be constrained by the Fibonacci retracement levels is the B point. So once the X and A point has been identified, the B point is formed by inputting a precise 618 retracement of the X to A leg. Now slightly different to the advanced patterns. In terms of precise 618 retracement, we mean it's got to be 1 pip more than 55.9 and 1 pip less than 70.2. Now why these points here? So 55.9 is exactly halfway between the 50% retracement and the 61.8. That's going to be 61.8 retracement level. And then the 70.2% is halfway between 61.8 and the 78.6. So let's show you that slightly better in this video. So the B point is going to retrace to at least a 618, precise 618. So what it meant by falling between those two levels. So precise 618, in theory you would think that's got to hit exactly this 618 level here, when in reality we're just looking for it to fall closer to the 618 level than the 50% retracement level. So let's just say halfway between those two is here, and that's going to be our 55.9% level. Just pretend this black line is 55.9%. So we need price to fall at least 1 pip below this level here in order to it to be classed as a precise 618. So it's closer to the 618 than the 50%. The same goes for the 786. So we're looking for a precise 618 retracement. So it's got to stay above this 70.2% retracement level in order to be closer to the 618 than the 786. So we can actually put these levels on. Let's just do 1.702. Okay. So not bad guess here. 0.702 is our 70.2 retracement level, so it's got to fall between these two lines here. If it extends 1 pip past this line, then that pattern is no longer valid. So that's what we mean by a precise 618 retracement. I hope that makes sense. So that is our B point formed there. And our C point now. C point is valid if it touches at least the 382 of A to B and does not exceed the A point or 100% of AB. So again, goes back to the advanced patterns, the same type of setup. At least the 382 retracement of AB and does not exceed A. So quite simply, we've got to have a wick exceed the 382 if price comes back down and closes below it. So long as that wick's exceeded it, that's still valid. And it cannot go past the 100% level or A. So if the wick exceeds this and price comes back down to close below it, that is an invalid pattern. So price cannot exceed this 100% level or the A point. Price can exceed that. The 382 level, price has got to exceed it at least. So if the wick goes through but does not close above it, that's still valid. So let's just put this in the middle here. Remove that now. So price has got to fall within this red box here, essentially, between the 382 and the 100% level. And that forms our C point. Now the most complex part of the harmonic patterns is the D point. So as mentioned here, the D point is no longer like the advanced patterns. It's no longer a single point. It's actually formed by a price reversal zone. So this is a combination of 3 different Fibonacci levels. So, and they're all different for different harmonic patterns. So in this instance, we've got the 786 extension of the X to A leg, 786 retracement of X to A, sorry. So if we take our fib retracement tool and take it from X up to A, we're looking for our first D point to come at the 786 retracement of that X to A leg. So if I just put a line here, this forms our first part of the PRZ, or potential reversal zone. Just make that straight. So 786 retracement of XA is our first part of the potential reversal zone. So we can get rid of this again. So that's that bit done. The next part is an AB equals CD movement. So the A to B leg is, measure it out, 86.4 pips movement. It's an 86.4 pip move down. So A to B equals C to D. So we're looking for an equal movement from A to B as we are from C to D. So from C, starting 0, 86.4 pips down, is this level here. Slightly lower. There. So this forms our second point of the PRZ, or potential reversal zone. So an equal move from A to B as it is from C to D. So we can actually copy this across and do that. So it's an exact move. So the same move down from A to B as there is from C to D. Hope that makes sense. And now the final part of the PRZ is slightly complex. The corresponding BC extensions. So this is variable depending on the C point. So our C point was 382 to A to B and does not exceed A. Our C point in this example forms at a precise 618 retracement because it's closer to the 618 than the 786 and 50%. So ours is a precise 618 retracement. That's all this is saying here. So remember that could fall between the 382 and 100%, so we can hit all of these Fibonacci ratios. We could have it a precise 382 if it's closer to the 382 than 50%. We can have it a precise 50% if it's closer to the 50% than the 382 and 618. So if it falls between this sort of area here, that's precise 50%. If it falls between this sort of area here, it's precise 61.8%. Let's just go up here. If it falls between here, it's precise 88.6%, and so on and so forth. So that's all this is saying here. If the C point is precise 32, if it's precise 50%, if it's precise 61.8, you have these different extension levels. So ours was a precise 61.8 of A to B. Therefore, the final part of the D point, or potential reversal zone, is a 1618 extension of the B to C leg, because our C point forms a precise 618. So B to C leg, and we are looking for a 1618 extension, which is this purple line down here, and that forms the final point of our PRZ. And get rid of this. So we've got 3 points here. All 3 points combined create our potential reversal zone. So in this red box here, those 3 points, this red box is made up of these 3 points here. So as price moves down into this point, let's say the bottom point here, D. Okay, so the pattern's not technically classed as being complete until the price exceeds the price extreme of the PRZ. So in this instance, because we're looking at a bullish pattern, in terms of the reversal is going to be bullish, so we're looking for a reversal to the upside, so price is going to come down, it's then going to reverse to the upside, therefore it's bullish pattern. So this pattern is not considered completed until the price hits or exceeds the lowest point in this PRZ, so the price extreme, the lowest extreme price of this potential reversal zone. So out of these three, we're looking for price to hit the lowest point, conventionally anyway. Now to look to enter a trade on this, none of the levels should extend past X, which we don't have any of the levels extending past X here. That's close, but I haven't done this to scale, which is why you should get the software, because it's not as subjective as this. But if that does exceed X on the software, or if you're working it out and it does exceed X, this pattern should actually be invalid if the D point extends past X, so you shouldn't trade this pattern. Technically you shouldn't trade this pattern, but for the purpose of this video we're going to run through how to enter it. So targets 382 and 618, and the stops at the 113 of X to A, so let's just put them in quickly. So stop loss level at the 113 of X to A. So stop loss is going to go here. And targets at the 382 and 618 of A to D. Now, as you can already see, we've got slightly better risk to reward ratio than we would in an advanced Gartley. So that is our risk, this level here, between the D point and our stop loss, and that is our reward to the first target, and obviously second target is going to be at that 618 level. Excuse me, just label this up as a stop loss. So this is our stop loss here at the 113 of X to A, and our targets 382 and 618. Now, to look for a trade entry on a harmonic pattern, you should wait until price enters this reversal zone here, the PRZ, potential reversal zone. And once the price enters this level, you're then looking at the candlestick formations in order to enter a trade, or it might be a double bottom, but it tends to be for not more risky but less conservative traders. You could just look for price to enter this zone here, then you might look for a rejection candle or an engulfing candle. Base your entry off of the close of that engulfing candle to the upside, obviously. So you've got, in case you didn't know, this is a sell candle, so you've got the sell candle, another bearish candle here, and then price reverses, and this one will be green. So you've got price moving down here on these red candles. This is extrapolated here, okay, so this is going to be within the price reversal zone, so just imagine this all going on within this red box here. So price is moving down from that C to D point. We enter our reversal zone here, we've got two bearish candles, and then we've finally got a bullish engulfing candle. Now this is a bullish engulfing candle because it's a bullish candle moved to the upside, and it engulfs the entirety of this previous bearish candle. So price is moving down, and then this strong candle to the upside engulfs this previous bearish move down on this candle here. So that could be the close of this candle, could be your entry, reason to get in on this pattern. And then again, same stop loss and targets apply, or whatever you've back tested, but this is a conventional stop loss and target levels. But that's how you usually tend to enter this. Now, I know I said before this pattern is technically not completed until the final D point of that PRZ has been reached. However, it's a potential reversal zone for a reason, so even if we only get into that first part, you could set up a rule that if it's in the first part you need double confirmation, so that might be a double bottom followed by this bullish engulfing candle, whereas if we get below this second bit, you only need that engulfing candle to enter the trade. You could set your management up like that, your trade management up like that. It's completely up to you, but yeah, technically the pattern's not complete until it reaches this bottom point, but you're looking for a reversal within this area here. So yeah, I hope that all makes sense, guys. Any questions, send me a message at the bottom of every page on my website here. Also for the candlesticks, that engulfing candle formation here, I've got a breakdown of the engulfing candles, indecision candles, reversal candles on my website as well, so go and check that out. It's all free. And like I said, all of the breakdown of all of the patterns are on my website as well, so check them out. So I hope you've enjoyed the video. Let me know if you'd like to see more of these. Yeah, thank you very much for watching. Bye bye.